My name is Roland Main and welcome to Kames Investment Briefing. Today I'm joined by Stephen Jones, Chief Investment Officer of Kames Capital, to discuss commodities.
Hello, Roland.
Stephen, it's been a downward spiral in commodities for some time now. How do you foresee the future?
Commodity prices have been under pressure now for the last year, for the simple premise that there is an excess supply across energy, industrial materials and indeed agricultural commodities relative to demand. In the classic investment 101, that will put pressure on prices, and without either production being curtailed or a significant increase in demand, then the pressure will stay on prices and they will be moving lower.
And what do you think the prospects are for the oil price? Do you think we've seen the last of $100 per barrel? Are we down somewhere around about $50 a barrel now?
$100 a barrel oil is going to be a distant memory for some time to come. Even $50 a barrel will be a challenge over the next 6 to 12 months, we believe. The simple fact remains that with Iran re-entering the oil market and selling their supply into demand, and continued high production out of North America in the form of shale oil and gas, supply will exceed demand, and in that dynamic, prices will stay low.
Gold, of course, has been a safe haven for so long, but even it has been affected by the sentiment around commodities. What do you think is going to happen with the gold price?
Gold is, in essence, a hedge against inflation and the ultimate safe haven asset for private or institutional portfolio managers. We live in a world where there is very little inflationary pressure. The fall in commodity prices, the general low interest rate and low demand environment that we are in will mean that inflation stays subdued for the next year or so. In that environment, gold's role is diminished and price moves will reflect that. We do not see a recovery in the gold price and indeed can see further weakness over the time frame ahead.
And are there any commodities that Kames Capital would invest in?
We don't see commodities as being attractive at this stage in the economic cycle. Price pressures are going to remain intense for the next 6 to 12 months across energy, agricultural and industrial commodity complexes. We see better opportunities elsewhere in domestic and developed markets away from commodities.
Stephen Jones, Chief Investment Officer of Kames Capital, thanks very much.